Cerrado has shifted phases. It's not longer can it survive, but it's can it execute? In Argentina, Don Nicolás is entering a pivotal year. The hedge is gone, spot gold now matters, and they are running an aggressive exploration program to extend mine life and scale operations. In Portugal, Lagoa Salgada is in a regulatory clash with APA, and the company has taken the process to court. And in Quebec, Montasource is moving towards a major milestone, a feasibility study this year. The big question is, can they turn these three assets into a much larger platform without crushing shareholder through dilution? Let's start.
Welcome, mining lovers. This is Cerrado de Minas, the Spanish podcast dedicated to mining investment, now in English. Do you want to learn? Subscribe. Do you want more content in English? Leave us a comment. The episode is about to start.
Wonderful.
Welcome to Cerrado de Minas, the Spanish podcast dedicated to mining and commodity investment. Today, in English. If you are expecting to have this in Spanish, don't worry. You can find a summary of this episode in Spanish on the channel. Today, Cerrado Gold is back onto the show. This is a company that has gone through a very important transformation over the last year. When we spoke with Mark last time, Cerrado was coming from a difficult period. Liquidity problems, the sale of its Brazilian asset, the need to strengthen the balance sheet, and an investment thesis based on turning three very different assets into a real cash flow platform. 1 year later, the situation is very different. Minera Don Nicolás in Argentina is now generating a minimum cash flow in a very strong gold price environment. The gold age has ended, which allowed the company to capture much more of the spot price or the spot gold price. Cerrado has accelerated exploration in a very aggressive way. Lagoa Salgada in Portugal remains the main short-term growth project, although there is still a regulatory issue to solve. And Mont Sorcier in Quebec is getting closer to a bankability feasibility study that could crystallize in a lot of value. So today, the question is not longer whether Cerrado has survived a difficult period. The question is more demanding. Can Cerrado execute well on these three assets, grow without too much dilution for shareholders, and turn this portfolio into a much larger company? And to answer these questions and much more, we have Mark back to the show. How are you, Mark?
I'm really well, thank you. How are you doing? Thank you very much for having us back. And as you mentioned, we things are looking very, very positive for Cerrado. So we're hoping for a really good year ahead of us.
Great. For those who haven't watched the previous interview, I strongly recommend to watch it and see the evolution of the company. And I will leave the link on the description. But I think that it's useful maybe to do a short recap to give some context to the audience that it's new. In that conversation a year ago, Cerrado presented itself as a company in full transformation. The company had sold its projects in Brazil, had strengthened its balance sheet, and had become focused on three main assets: Minera Don Nicolás in Argentina, Lagoa Salgada in Portugal, and Mont Sorcier in Quebec. Mark explained that the thesis was not to be a company with pure exposure to only one metal, like gold. The idea was to build a platform of high-quality assets that can generate cash flow. The key short-term asset was Don Nicolás, which had gone from around 20,000 ounces per year when it was acquired to a guidance of 55 to 60,000 ounces per year. The big question was whether Cerrado could extend the mine life, develop Paloma underground, and continue growing without depending on the market financing. We also talk about Lagoa Salgada as the next big step for the company, a polymetallic BMS project in Portugal with a feasibility study, financing potential, and the possibility of becoming a second source of production. And finally, there was Mont Sorcier, the high-purity iron ore asset in Quebec. It's further away from the gold thesis, but it has a very large potential scale. So today, we need to review what was achieved, has been delayed, and what has changed in this investment thesis. Mark, for starting, last year, Cerrado was recognized one of the best performing companies on the TCXV with a strong share price rating. But after a move like that, the market does not only reward the story anymore, it starts to demand execution. When we spoke last time, Cerrado was still a transformation and recovery story. Where would you say that is the company today? Is it still a turnaround story, or it's now an execution story?
I think we're coming out of that phase of being an execution story, into the execution only story, but we still see lots and lots of growth at all three of our assets. So there's still some development to be done. For example, if I look at Minera Don Nicolas, it's been based on existing operations. I was just looking. We should have cash. Revenue of somewhere in the region of $250 million this year. Basically, we should see operating cash flow being around $120 million. So from that perspective, we're in a really good shape. Our balance sheet is being cleaned up. We have a mine plan currently, which will run 2.5 to 3 years. And so on that plan, we see very much consistency. All-in costs around that $1,800 to $2,000. So we have a stability at MDN that we haven't had before. However, what have we done for people today? And what we're doing now is we're looking to grow that asset. We're looking to grow. We're looking to make this into a substantial asset that we think it can be. And so looking at the critical impetus now that we have stability, and to your point, we're managing the assets. What we're looking to do is really, we need to grow the mine life. Critical to this project is to develop our mine life, extend that mine life by another 3 years plus. We're working on a number of avenues to achieve that. One of which is a very significant exploration program that we're having some good success with. And basically, we mentioned to the street that we're going to do about 50,000 meters of exploration at MDN from surface. But we're also developing underground as well on top of that. And so from the underground, we're mining from underground, and that'll really start hitting in May is when our optimized production profile starts, where we've had lesser production for the previous months. But then on top of that, we're also looking for substantial exploration underground, and I would guess that we'll probably get another 20,000 meters of underground exploration once we have our rig in place. And we it's very difficult to get exploration rigs for underground in Argentina right now. Yeah. We have one coming in July, and then we'll be very aggressive with that rig to drive it. So if I say to you, management are comfortable that we can overcome that short-term mine life, and I think that is what we will try to demonstrate to the market in the coming months. And I think we have a high degree of confidence that we can do that. Right now, if you're an investor in Cerrado, you may have some concerns about long-term mine life, but I think we're going to hopefully put those concerns to bed in the near term. Where I think it now gives us, from a management perspective, a little bit of relief that this is now no longer a 2-year mine life, or a 3-year mine life, but a substantially longer one, which will enable us to really build this project to the size that we think it can be. There's no guarantee this is going to be like our neighbors, like Cerro Moro, Cerro Negro, Cerro Vanguardia, but you know what? We don't know that it can't be, and we really need to go out there and really do some serious exploration, which we're doing. So even though I'll use the perspective that even though MDN is our only producing asset to date, it's probably the project that we least understand. So it requires a lot of development, and our objective here is to make this thing produce more than 100,000 ounces in the next few years. We think it has the capability, but I think if I come out and say that to you today, we're early on that. But that's our goal, and that's our objective.
Thank you for the question, and you really jumped on further questions that I had on my list. But just because you already said about all the exploration program that you will do, the 50,000 meters on surface, then other 20,000 underground, what assumptions do you think that the mine can grow? Are you expecting this only 3 additional years? Are you expecting even further? How much do you think that this, or what is a reasonable target that you will be happy with at the end of this exploration program?
Yeah, which is, it comes back to your exact question at the very beginning. This is still a development project. We have some stability for the short term, and I think in the very short term we're going to be able to show stability over medium term. But I think it'll also show that there's lots of potential to grow this into a bigger long-term story. But we really only started drilling in June of last year. We had one rig. It didn't give us the productivity to really develop our program substantially. So now what we did is we bought another 3 rigs. So now we have 4 rigs on the property. We're buying a 5th rig for underground. We may buy another rig. But we're buying these rigs, and we've expanded our tails facility to 5 years because we're very confident we can get there. And so what I'd say to you is, prior to our drilling that started last June, which was a small program, it was a bigger program, but small in terms of only 1 rig. What we're doing now is we're developing the project to become a 100,000 ounce producer with a long mine life, because that's where we think it can get to. But I can't guarantee that.
Perfect. In terms of productivity, the heap leach seems to have improved a lot, no? And you talked, I think, in the previous interview around 4,000 ounces per month under normal condition. Is this a sustainable level? And what is the role of the water and irrigation limitations play?
Well, I mean, we've had some in the fourth quarter, but more importantly, in the first quarter, we've had some water issues. The summer has been a very dry summer, unseasonal, uncharacteristically dry, and so we've had some problems with. I mean, water has cost us on a monthly basis. Shipping on water about 60 trucks a day has cost us about $850,000 a month, and not only that, but it's also limited our ability to irrigate and to irrigate all of the leach pads. We've been limited in terms of our capability to provide greater irrigation, to provide greater production. So what I'd say to you is this: is that but doesn't to a certain extent, what that means is that gold is still there on the pad, and as water comes, which it is now, and we've also drilled successfully a water hole that is reduced dramatically our reliance on external water. But we're coming into the winter season, May, June, we should be, quite a bit of water coming in, which could totally alleviate any requirement for additional water, which has been our history. The history of the mine has been we haven't needed to ship in water, but we've just had an unseasonably dry winter, which happens, or or dry summer, which happens. So I don't think water is always in this part of the world. It's always very, very important, but at the same point, it doesn't have to be an impediment to our future production and mining, mining life. It'll always be something we have to pay very close attention to, but we're hoping that we're not going to see a dry summer coming in October, November, and if we don't have that, for the next 6 months, we're in good shape where we will have plenty of water.
Perfect. The gold age ended on January of 2026. How much this changed the cash generation of Minera Don Nicolás now that the company is basically selling on a spot price?
It's been material. It's been quite material. As you've probably seen, we finished the year with about $22 million in cash in 2025. I would say that cash position has jumped pretty substantially into the first quarter. You'll see those results coming by the end of May. But in terms of for example, in the fourth quarter, I believe that the gold prices on average were about $4,900, and I think because of our hedging, we were at $3,400. Now that only happened for 3 or 4 months or something to that effect, maybe 5 months. But at the same point, that's a reflection on that quarter that we lost $1,500 an ounce on basically 13,000 ounces. So it has a material impact. Again, I cite to you that at say $4,500 gold. We're generating close to $250 million in revenue. We should do somewhere close to about $120 million of mine operating cash flow. So from that regard, we're in a strong position, and we're growing, and we expect to have a very substantial cash position by the end of the year, which is good, which will enable us to drive the projects that we want. But we're spending $30 million a year at MDN this year. We're spending $30 million on a heap, $5 million on a heap leach, $5 million on extending the leaching pads, and then basically $20 million on exploration. We're also upgrading the fleet, as I mentioned to you, the tails facility we're taking to 5 years. So we're preparing for a long mine life at this asset. And we believe that not only will we have a much longer mine life, but we also see an ability to grow the production profile as well. We don't think that we're going to be limited to 60,000 ounces in the future.
My next question was about the cost might be a little higher due to these improvement projects that you are doing, and you already mentioned that, and I think that it was clear on that last answer. Maybe we can move to the share price, that has this strong move over the last year. Do you think that the market is starting to understand the value of Cerrado? Or you still mainly believe that it's mainly valuing Minera Don Nicolás?
I mean, listen. I think that again, of critical importance internally is our mine life, and I think that's something that also concerns the market. And I think as soon as we can show evidence that we can extend our mine life, right now there's this perspective that, hey, I hope we can change the mine life, and we hope we can extend it. But when I think we can show the market that there's a very strong indication that our mine life provide evidence that there's that mine life extension, then I think we should be more closely compared to other companies that trade below, many of our peer group trade below 50,000 ounces, and they have market caps of 450 to 500 million valuations. So I think we're still undervalued, but I think there's a reason for that, and that's that mine life to a certain extent. And again, I think that I'll just iterate that on the drilling program is going very, very well. Throughout the whole Deserto Massif, there's lots of gold. The question is, you just have to build dense areas where you can actually create resources. We could publish drill holes that would have people's eyes popping out. But that's not a true reflection of what's happening. What's happening is that in this area of the world, what you tend to find is for the most part, you tend to find areas where you get lots of small veins and medium-sized veins that have differences in terms of their grade profile. And so it's not any one drill hole or any 5 drill holes is not a true reflection necessarily of what you're going to end up with. We published, I think, 2 or 3 years ago, a hole that we had in Chulungo, and I think the hole was something to the effect of 10 meters or something to that effect of 120 grams or something. And the fact of the matter is that we were somewhat new on exploration at that time in the area, and so we kind of thought, as you would in most jurisdictions, that'd be a good conduit for more. Yeah. And we did have more gold, and we mined from that area, but not at that grade and not at on those intervals. So the fact is, what we want to do is we want to be careful that when we come to the market, we want to come and say, listen, we have this zone, this area, we've got this area, and we have this area, and frankly, this is what's going to give us the long mine life that can increase our production, and that takes time. I mean, in order, to each area, I think probably requires 25 drill holes. They tend to be moderately shallow, so it needs probably 25 holes or so per area to determine a resource. And I think the market, when we do come out with that, I think they're going to be happy. But we just have to be patient and understand that this is a program that's less than a year old.
No, I mean, what you just point out, it's really true, and I think that it's very nice that you commented for investors, for people that it's new on this kind of projects. When you work with veins, the veins, they are narrow usually. They are really complicated to follow. You need to be very careful when you are drilling. What is the distance between the drill holes in order to make a resource that then it becomes something that you can trust, that you don't start something that then it's not reliable. Then these things take time, and you strongly need to have a very evidence and supportive data to move forward. Maybe the following question here is, when do you think that you can publish this resource? And if the resource, it intends to be infrared resource or intend to be a little bit more in detail?
I would think that when we publish our initial resources, they'll probably be in the inferred category, and certainly on the exploration programs.
Okay, perfect. Let's move to Portugal, maybe. Lagoa Salgada was one of the most important expected catalysts last year, but the process became more complicated after the decision from the Portuguese environmental agents, the APA. Maybe, Mark, can you summarize exactly what happened in this process?
Sure. It's our view that there were tremendous irregularities in the process which drove the APA to make the decisions that they have. APA has 17 independent technical evaluation committees, and basically our project in May of 2025 received unanimity for all 17 technical evaluation committees approval for our project. But the president of APA rejected our project on two cases. One was that there was involvement of cyanide in the project, and two, that he wanted more detail on the water aquifers. Now, we understood the cyanide issue. Cyanide on a technical basis can be dealt with in small quantities, which we have, and it can be effectively managed. But we understood the political negativity that the utterance of cyanide brings to any community or any environmental perspective. So we agreed with APA and the president of APA that we would submit what's called an Article 16, and basically we'd resubmit the project without cyanide, which we had already found economically it was cheaper to float and better to float than using cyanide, and so we already had that in our plan. Although it was behind, it was not in the plan that we submitted as part of our environmental study. So because we filed our environmental study in November 24, and during the period of November to May, we had changed the flow chart. Anyway, long story short is that we filed our Article 16 submission, which is to correct the two issues that they brought to us. We filed those in early November of 25. On the cyanide, we removed the cyanide totally. On the water, the aquifer issue, we had engaged, and we continue to engage the most preeminent individual in the mining world for water resource management out of Spain. And the fact is, we have the most sophisticated hydrological study that's ever been conducted in Portugal. Actually, our mine will be used, the aquifer study that we've done is actually being used as a PhD argument for which will be one of the first aquifer studies by a PhD student at the University of Lisbon. So it's a very, very good quality work. We submitted our Article 16. Basically, we were rejected predominantly because of the aquifers, but not the aquifers that were part of our environmental impact assessment and that they had commented on. The final comment that they had was that there was a possibility that a third aquifer could have problems as a consequence of our mine. Now, they didn't say we're going to have problems. They didn't say, they didn't provide us what the possibility of the problems could be. There was no scientific discourse as to what what the issue was, and basically the president of APA actually came out and said that he was not going to review our counter to their discussion, which by law he should have done, because he was going to reject the project anyway. So we think there've been irregularities. We think there's been very problematic. Obviously, quite a shock to us, because just remember, we were invited to Portugal by the Secretary of State for Energy and Mining in 2021 because of tremendous success we had in drilling the Lagoa Salgada project. And basically, the government of Portugal had often, in the last 10 years, they've been promoting Portugal because of with Lagoa Salgada. So we've had tremendous relationships with the government at all levels of government, local and federal. And basically, in 21. The Secretary of State for Energy and Mining came to my office and said, "Listen, we really want you to move aggressively and continue this process." She a year later, within a year, she gave us a project of national interest status, which means that you have the federal approval, you have the local approval to drive a project forward. So we've had tremendous relationships, and we've probably been in contact with the different and varying government departments, agencies, probably, I'm going to guess, at least 10 times a month over the course of the last 7 or 8 years. And so when this opinion came, and we also had very close discussions with APA. So when this announcement was made, it was a complete shock to us. So we feel that there have been irregularities. We feel that there's been bias, and we don't believe that there's scientific integrity in the response. And so unfortunately, we had to file an injunction against the decision by APA. It's now in the courts, and we'll see where we go.
And have you been in touch after that decision with the government, and what is their reply?
Well, I mean, we have been, and we are in touch with the government, and I think the government would like to, would like to see us make some form of amicable solution. But one of the common refrains we're getting is that we're in the courts, and basically we have to wait to see what the courts determine. So with the injunction that we have right now, what we hope to do is suspend any consequences of the negative opinion from APA, and then we'll see how we proceed from there. But this has been very, very damaging to Cerrado. It's been very damaging to Lagoa, and I think frankly it's not so good for Portugal either.
And when you are expecting to have the resolution of this injunction, or something that clear the path to move forward?
We don't know. I mean, the courts have their own timelines, and so we're just waiting now to see what the judge with the injunction has to determine. It could be it could be a month, it could be 2 months. We don't think it'll be extensive, but we think it could be a couple of months, hopefully not too much longer than that. And then basically, if he approves our injunction, then what we have is we have the ability to refile our IEA. We would probably refile at the same time our RECAPE, or the detailed engineering, as well. It's all ready. We're finished. We're ready to go. And then we'll see again. Then that'll have to go back to APA, and APA will have to make their determination as to what they believe in the project. Now, the difference will be that it's something that a lot of people are watching. One of the things that we believe is that certain people thought that when we got the negative opinion, we'd disappear. And that's not happening. We're obviously, we put $45 million to date into this project, US dollars into this project. And the fact is we believe in this project. We believe in Portugal. We think it's a great place with tremendous resources, and with the need for the European Union for critical minerals. Yeah. This can be the biggest copper project in Europe. And so the fact of the matter is that we believe in the long-term viability. We feel that there's I don't think the government in general are I think they're curious and watching what's happening with APA. The Canadian government, we're very active in our discussions with the Canadian government, and they're watching this very closely. We're now moving to Europe and making sure the European Union are aware of what's going on here. And this is not because we feel that we want to do this because it's our right. We feel the fact that this project is going to be of tremendous benefit to the citizens and the local community, with very limited interference into their community life. And so the fact of the matter is that if we felt that we didn't have a strong project with merits of and no major impact on environment or the aquifers for that matter, we would not be pushing as we are. We don't want to be places where we don't necessarily want to be. But we've had tremendous support from the government for a long time. We happen to have somebody in a position of power now who's exercised his power, but we believe that exercise of power is being done with irregularity and inconsistencies, and that's something that we want to that we need to remedy.
Thanks, Mark, for that clarification. Leaving the permit aside for a moment, what has changed technically at Lagoa Salgada compared with the previous feasibility study?
Well, I mean, we in 2025, late 24 and 25, we completed very substantive metallurgical testing, and we had very, very positive results where basically we saw improvement in grade, we saw the concentrate, we saw improvement in recoveries, we saw lower deleterious elements. We've reduced our footprint probably by 25% in terms of the layout of the mine. We've moved to different technical elements that are far more economic with less cost, and second of all, which will also reduce our environmental footprint as well. So in many respects, this project has become far more mature and far more far more economically viable, as well as being, again, we've enhanced our impact on the local community. And just to reiterate, our management team have built 3 mines in the last 25 years, and we recently received from all 3 mayors, current mayors of these different areas. You mentioned Brazil earlier. We've received three reports and letters of recommendation from these communities of the benefit that their mines have had, and the fact that we've had responsible mining, and that Cerrado has acted, and Cerrado's principles have acted with very strong conscientiousness towards the local community and the environment. And I think that it's really important to note, we're not trying to muscle in here on something that we think is again, we want to do this responsibly, and we think there's a tremendous benefit to Portugal, Europe, etc.
Do you think that it's still valid about the construction decision by the end of this year, or do you think that all of these judicial things that is going on, investors should expect a little bit of delay? And if so, well, I mean, when do you think that it's reasonable?
I think, again, it really depends on I think our course of action, and we're just trying to determine this now, but again, we believe we have a very viable project that is impeded by the I guess by right now by the judicial process, which. So from that perspective, when we have greater clarity on that, we'll also be filing our optimized feasibility study when we have clarity on that, which I think, again, will be positive. And so at that point, I think we will be in a position to at least, to know whether we're going to proceed or not. And so that, to me, is when, we'll have our FID. And I think that'll be, again, I'm hopeful that'll be, summer, sometime in the summer.
Great. The financing with the UK Export Finance and Banco Santander remains a key part of the plan. Is that support still intact despite the regulatory delay?
Their support is still there. Obviously, the ECAs or export credit agencies, they work with lots of projects that are infrastructure related, and many of these projects have these types of delays, and they have the government, they have associated issues or delays or hurdles that they have to accomplish. So they're well and truly cognizant that these events happen. It's not good for anybody, but at the same point, we still have the support as it stands.
Great. Let's move maybe to the Montasource now. It's probably the most different asset in the portfolio, a high purity iron ore in Quebec with a resource of more than 1.1 to 1.3 billion tons, a 67% iron product, potentially for green steel, and a bankability feasibility study expected in 2026. Montasource is probably the most difficult asset to understand for an investor who looks at Cerrado as a gold company. How do you explain it in 2 minutes, and why should we not see as a distraction?
Our business and when I look at our presentation, we're talking about the byline on our presentation is driving substantial cash flow with limited dilution. My background as an economist and as an investment banker long ago, but it still holds that I want to make money. And we want to make money for investors, and we feel at the end of the day that is our responsibility, but that's also our opportunity. So if I look, for example, at the scale and scope of Mont Sorcier, this asset can be in production for 20, 40 years, generating $350 million a year of free cash flow to our company. That's a pretty attractive scenario for anybody. Yeah. Now, if I look at, let's hope that we were responsible for building Jacobina, which is in Brazil, which is now held by Pan American Silver, but that was ex-Yamana. But that asset has been producing 100,000, 150,000 to 200,000 ounces for the better part of 20 years now. But that's an exception. I mean, I think when you tend to look at gold and precious metals and even base metal projects, they tend to have a lesser mine life. So what I would say to you is this: I think that as a junior company, our first and foremost objective is to generate cash. If I look at MDN, again, we look to retain our all-in sustaining cost, around $1,800 at $3,600, $4,000, $4,500 gold. We make a lot of money, and if I look at but right now, as I mentioned earlier, I mean, we're looking at a short mine life, and we're working hard to extend that mine life. In Portugal, the previous feasibility had a 14-year mine life, and generating good cash flow, and probably we believe lots of expansion potential. But Quebec is already there. I mean, we have the asset, we have the resources. It's a very simple project. We have all the infrastructure in place that we need. Technically, it's an open pit deposit, strip ratio less than 1-to-1 initially. The reality here is that this project just makes a lot of money, and so what I'd say to shareholders is that you here have an annuity for 20 years where you have $350 million, which is our market cap, and by using Mont Sorcier, by using MDN, by using Lagoa to fund this project, we were able to create this project without a lot of dilution. Lagoa, we feel we can bring that to production without any additional dilution, is where it sits right now. We feel that with MDN, obviously we were counting on some cash flow coming from Lagoa, and the fact is, but the strong cash flow is coming from MDN right now. We didn't anticipate these high gold prices, so the fact is, there's a very good opportunity or chance that we'll be able to fund Mont Sorcier without raising any more capital for shareholders. So if I look at the three assets, basically combined, just using the old numbers, not the current numbers that I think will be better, but using the old numbers, and the current numbers, for example, I don't think, say MDN will generate the same. If we use last year's numbers, that was, I think it was about $50 million that we generated of operating cash. If I use the feasibility study for Lagoa, that was about another 75 million. That's 125 million. So we'll have a lot of funds to go towards the equity requirement for Mont Sorcier. And Mont Sorcier, we can use offtake funding, and we can use streams if we need to. But I can buy so with the same investor base that I have right now, we can be generating $500 million of cash for our investors. That's a different story.
Completely.
And there's no technical reason we can do this. There's no political reason we can't do this. The Canadian government are very excited by this project. So we'll complete the feasibility study actually by June. You mentioned in 26, but that'll be done by June. We'll file. We're going to file the environmental permit by the end of the year, probably the end of the year, early 27. Certainly early in the first quarter if it's in 27. So from that perspective, this project is a go. It's moving forward. We have the technical capability to develop all our projects. There's nothing unique about these projects, and the fact is we also have the cash to do it. So really, we just need the time and patience. And as we evolve, we will be improving projects like MDN. We think MDN has the capability. Our next door neighbor in Argentina is the Cerro Moro, which is Pan American and the old Yamana project. Basically, that project was producing 150,000 ounces a year with a high silver content, and there's no reason why we can't be doing that at MDN. So that's our objective, is to drive our projects. Always make sure that they're low-cost producers, so we're always generating cash. Lagoa Salgada, I mean, at the previous feasibility study, I think our all-in costs on a zinc equivalent basis was 59 cents. Today, zinc is trading at $1.40, $1.50. So we always want to be a low-cost producer. We always want to find big assets that have a long mine life. We believe that with Lagoa, with MDN, those have that capability. But we know we have that right now with Mont Sorcier, generating $350 million a year U.S. numbers, which is 2 or 3 times our market cap right now.
So for what you was just saying, I understand that your preference is to build Mont Sorcier by yourselves, right? It's not to bring a strategic partner. It's not to create a joint venture. It's absolutely not to sell the asset. The idea is to pursue and by as a Cerrado itself and build this mine.
Our fiduciary responsibility is to make the most money we can for shareholders. So between now and coming into production in 2030, 2031, the fact of the matter is that lots of things can change. But what I'm saying to you is we have the capability. We have the technical, we have the funding, we have the capability to do it ourselves. Is that the right course? We'll have to wait and see. When we build Lagoa Salgada, our company will be north of 100,000 ounces of production, of gold equivalent production. Will be 60% of our company will remain resource based. We'll have a very good critical minerals basis with copper. And so, again, from our vantage point, we're just trying to generate as much cash as we can over the greatest period of time with the least inputs. And therefore, that solution should be a really good return to shareholders. So I would say you pointed out, just to finish on that point, you mentioned that we had a good year in 2025 in terms of our share performance, and indeed we did. But I think 2026 has the opportunity, with what I see in front of us, to also have a very, very significant impact in terms of moving a lot higher. And the fact is that we still have a lot of very, very good things occurring in the next 6 months.
Great, and we will look forward to see all of this news and all of this performance. At the end of 2025, you had around 22 to 23 million in cash. I didn't take the number, but I think that you said what you have right now. But you expect the cash position to grow during 2026? I mean, there is a lot of things like the end of the hedge, the increase of production, etc. What level of cash makes you comfortable to finance exploration, permit, and studies, all of these three projects at the same time?
Well, I mentioned that we're spending $40 million this year. 30 million of that is going to MDN. 10 million, 5 million going to let's say 5 million Mont Sorcier, 5 million to Lagoa. I don't think we need to expand dramatically our expenditures in Quebec or in Portugal. We may do some extra drilling in Portugal because we have tremendous returns on our drilling in Portugal in terms of the tonnages and that we improve. But in terms of I think 50,000 meters a year of exploration at MDN in Argentina is expected. I don't think that's going to reduce at all. I think we're going to continue to I think up until this program, we've done less than 40,000 meters of drilling on that project. If you look at if I look at Cerro Vanguardia, they've probably done 3.5 million meters of drilling. So the fact of the matter is that we've done very, very little on this project. And I'll make a point. We're having a lot of guys joining us from Cerro Negro. And we have our underground exploration geologist joined us from Cerro Negro. And I said, well, why did you join us? Because most of the time a year ago, everyone was leaving us to go to these companies. Yeah. And he's saying, well, I see a tremendous future in the next 4 to 5 years at this company. We're buying our fleet. So one of the things with costs is that we're exchanging rental equipment for owner equipment. And so that's where you're seeing elevated costs in the short term. Now the fleet is pretty much complete, and we have what we want. So we're not going to, that cost will probably save in the next 3 months. The additional cost of conversion will probably pay for itself. So anyway, long story short is that I think that I think all three assets have lots of scope for expansion, but we'll have lots of money in our treasury. And we're reducing our debt as well, as much as we can. But we'll have lots of money in treasury to fulfill obligations that will drive growth. And where am I comfortable? I'd like to see nothing less than 50 million in our treasury at any time.
Good. Talking about cash as well. You have also announced a share buyback program with 3 assets that need capital. How do you decide between buying back shares and keeping cash?
Well, I'd say this, and it's a good question, but our capital, again, our operating capital with current gold prices is basically $120 million a year. From MDN. We don't need substantial capex for Portugal. We've spent all the capex, the big capital, the 5 million this year in Mont Sorcier, the 5 million at Lagoa Salgada in Portugal. These mines or these assets are now ready for development, and the fact, as I mentioned to you, the construction capital is going to come from third parties for Lagoa entirely, in my view, the way it sits today. And the fact is that the development capital for Mont Sorcier will probably need to have about $100 million to contribute to that. But frankly, I think we'll be in a position to generate that with our own internal cash, or we can see what happens at that time. But the reality is that we're very comfortable that we will be cash rich and hopefully debt poor.
Good. Your thesis depends a lot of the team ability to execute on several fronts at the same time. How do you avoid becoming too spread out?
Well, I'll say this. I think in terms of like right now, if I look at Lagoa, our capital expenditures at Lagoa have come to an end. We're now ready to bring that into a construction position. So, as I said to you before, the construction capital and requirements is going to be ring fenced from our operations. That'll be funded independently. We'll have all the money we need according to our projections in a separate pod, in a separate pocket, that'll be left there. Same thing with MDN, with Mont Sorcier. That'll be in a separate pocket as well. So the fact is that we just don't see a lot of need for. We'll be generating a lot more capital than we have our need for. And so coming back to the share buyback, we feel that the best investment that we can possibly have at this point is probably looking at, once we have a stable and comfortable cash position, is our own shares. And again, I mentioned to you before, I see realistically and without any form of exaggeration, let's look at MDN. If we can show to the market that we have evidence of a longer mine life, of a 5-year plus mine life, 6-year plus mine life, I think we should trade on a comparable basis to other companies that are producing less than 50,000 ounces a year, which could add as much as $200 million to our market cap. If we just look at that fact. And I don't think, again, I can tell you names of companies that are trading at 400, 500. We're trading now at 250. So the fact is, I think, let's say we had $200 million on the back of that. That would probably be the higher end of the range that I'd say, but let's say $100 to $200 million. Mm-hmm. If I look at Lagoa, our expectation, the previous feasibility study we had was about 150 million MPV. Let's just use that one. The fact is, most companies in the sector trade about a 0.8 times. Let's say we go to trade at 0.5 times because it needs to come to once we have the path sorted out, which I think will happen before the end of the year. So by the end of the year, that 150 million should be worth about 75 million US, which is about $100 million. And then if I look at the feasibility study coming out before the mid-year on Mont Sorcier, we think it'll be around the same. Let's just use the old PEA. We think it'd probably be around that number. So that's 1.5 billion. Let's say we use just 0.1% of that MPV on a project that feasibility completed, basically the environmental impact assessment being submitted in within 6 months, and that we have project funding in place for that, which we have with UKEF and TD Bank, just like we're using UKEF and Santander, we're using UKEF. And so let's say we get 0.1 times that multiple, which I think is very cheap. I would buy this asset for 0.1 times multiple anytime I could get my hands on it. But that would give us 150 million US, which is, let's use the equivalent of 200 million Canadian. So I've just highlighted, and let's use the lower range of 100 million to MDN. So if I have 100, I've got 100, and I have 200, that's 400 million of valuation in Canadian dollars that I could see added to our company this year. And I don't think that's being crazy. I don't think I'm being overly aggressive in making that commentary. No. Now, I can't guarantee that's going to happen, of course. But if I look at it, I think 2026 is going to be a fabulous year for shareholders. But as we build up our cash, I want to buy more and more shares. But I also want to make sure that I have a very, very strong cash position, because you never know when markets, the commodity markets are always volatile, so you never know what's going to happen. And as you noted earlier in your call, I don't want to sell an asset again in my life. That asset that we sold in Brazil. Do you know what the NPV of that asset is?
Many years ahead.
Sorry?
This is many years ahead.
Well, that asset is now permitted, right? It's permitted and ready to go. But when we sold it, gold prices were at around 2,400, but that had an MPV at the time of $390 million US. We sold it for 60 million US. The MPV on that asset right now is probably closer to $2.5 to $3 billion.
Of course.
So I never want that to happen again. And you cannot, I've been in the financial markets and specifically with mining companies and working with mining companies for the better part of 40 years. The fact of the matter is you can't rely on the markets. And I never want to be in a position again where I have to rely on the markets, where that's why cash is so important. But I can tell you the first place I'm going to put my money outside of our operations is in buying back my shares.
Really good answer. Thank you very much for everything and for the interview. Mark, to close this interview, I will summarize in this way. In the previous interview, Cerrado was a transformation story. You had sold the Brazil, you were strengthening the balance sheet, and you wanted to show that Don Nicolas could finance the company's growth. Today, the company already generates meaningful cash flow. It's not longer age, and it's drilling aggressively, and it has 2 large projects moving closer to key decision points. But the bar is also higher now. You need to extend the mine life in Argentina, solve the permit issue in Portugal, and define what to do with Montasource. So the final question is, if we speak again in 1 year, which I hope so, what needs to be happen for you to say that 2026 was another year of value creation for Cerrado?
Firstly, I hope we can have this conversation in 6 months' time.
Right.
And what I'd say is mine life at Cerrado, at MDN, excuse me, a path forward on Lagoa Salgada in Portugal, and a good feasibility study from Mont Sorcier. I expect that to occur before September.
Perfect, Mark. We will looking forward to this, and of course, in 6 months, when all of these things happen, we will be in touch again for update on the Cerrado story, which will be very different from now. Many thanks.
I very much appreciate your time and your engagement, and we look forward to updating you in 6 months' time.
Disclaimer: the content in Charlando de Minas is not an investment advice. Amadeu Bonet and his guests are not investment advisors. The authors may have interest in the companies mentioned in this publication. They may also have bias and not be impartial. The information in this publication and all the others in Charlando de Minas is impersonal by nature and should be considered as an entertainment product. The minimum risk of any investment mentioned in this video is 100% of the capital. Before to make any investment decision, contact to a financial or investment advisor or someone qualified with experience. These broadcasts are a narrative of my learnings in the world of commodities and mining investment. In this podcast, we will try to bring experts, professionals, and companies. If you like it, please subscribe. I am Amadeu Bonet. Welcome to Charlando de Minas.